Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I'll share my analysis of historical trends of the cables sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The cable sector companies in India manufacture and supply various types of cables and accessories catering to diverse industries. The types of cables that they manufacture includes power and electrical cables, house wires and building wires, communication and data cables, and specialty and instrumentation cables. The key growth drivers includes urbanization and real estate boom, electrification and power sector growth, renewable energy expansion, digital India and 5G rollout, and make in India and FDI inflows. The government supports this sector with policies like production linked incentive scheme, national infrastructure pipeline, smart cities mission, Ujjwala and Saubhagya Yojnas, and power grid investment. The major challenges for the sector includes raw material volatility, unorganized sector competition, working capital intensity, regulatory compliance and safety, and dependence on real estate and infra cycles. So now in order to identify trends in this sector, I will present two graphs. They are the end result of my analysis of the share price movement of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of 2 large cap, 3 mid cap and 5 small cap companies. The first graph will show the yearly returns, whereas the second graph will show the monthly returns. So let's start with the first graph, which is the yearly returns graph. So this is the yearly returns graph. The green bars over here shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line at the bottom shows the cumulative returns. The green lines here shows the number of months with positive returns and the red line shows number of months with negative returns. So let's start with 2015. 2015 was a very good year for the sector, and the sector managed to give returns of 44.90% in that year with 8 positive months and 4 negative months. 2016 was a dull year for the sector as the sector managed to give returns of only 2.73% with 7 negative months and 5 positive months. But 2017 proved to be a very good year for the sector as the sector skyrocketed and gave returns of 143.26% in that year with 9 positive months and 3 negative months. But the sector nosedived in 2018 and managed to give negative return of minus 30% with 7 negative months and 5 positive months. 2019 too was not a good year for this sector as the sector managed to give negative returns again, this time of minus 5.17% with 6 positive months and 6 negative months. The situation improved in 2020 and the sector managed to give respectable returns of 25.06% with 7 positive months and 5 negative months. 2021 proved to be a very good year for this sector as the sector managed to give returns of 107.47% in that year with 7 positive months and 5 negative months. 2022 again was a good year for the sector and the sector managed to give returns of 40.52% with 7 positive months and 5 negative months. 2023 proved to be an exceptional year for this sector as the sector managed to give returns of 143.53% with 10 out of the 12 months giving positive returns and only 2 months giving negative returns. 2024 too was a very good year for the sector as the sector managed to give returns of 88.73% with 11 positive months and only 1 negative month. So all in all, a good sector it seems. If we check the cumulative growth over here and follow this orange line, we can see that the 10 years cumulative returns are 3,928.16%, which is over 40x. So 40x in last 10 years, amazing returns. Let's see the key takeaways. So the cumulative returns of 3,928.16%, that is 40x. So we have seen that. CAGR of 44.71%. Now this is very good, extremely good CAGR. So 10-year CAGR of 44.7% is easily among the top sectors of the entire share market. Net negative yearly returns, so that is true. So there were 2 years in the last 10 years which gave net negative yearly returns, and those 2 years were 2018 and 2019. So not too bad, not too good. Best year was 2023. The sector managed to give astronomical returns of 143.53% in that year. And the worst year was 2018. Sector gave negative returns of minus 30% in that year. And positive to negative year ratio is 4 is to 1, which is a good number. Not too good, not too bad. Now let's see the monthly returns graph and see how it fares in terms of every month. This is the monthly returns graph, and it seems it's quite zigzag in nature. Let's see. This green bar shows the positive mean monthly returns. The red bar shows the negative mean monthly returns. The green line shows the number of years with positive returns, and red line shows number of years with negative returns. So let's start with January. January uh, managed to give average returns of 3.62% over the last 10 years, which is certainly a respectable returns. But uh, it gave positive returns in 6 years and negative returns in 4 years. But then came February and March, and both of these years are very bad year, with February amongst the worst that I have seen for any sector. And the average return for this sector in the month of February is minus 6.65%, with 8 negative years, only 2 positive years. March 2 was a very bad month for this sector, as this sector managed to give positive returns 6 times and negative returns 4 times. April seems to be a very good month for this sector, as this sector managed to give average returns of 10.72% over the last 10 years, with 9 positive years and only 1 negative year. May, June, and July, all three are strong months for this sector, with average returns of 3.90%, 5.06%, and 4.93% respectively. All of them gave positive returns 6 times out of 10 years and 4 times negative returns. August 2 is a decent month for this sector, with 3.91% average returns, but 5 positive years and 5 negative years. September is clearly a bad month for this sector, with almost negligible returns of 0.27%, with 7 negative years and only 3 positive years. But then October, November, and December, all three seems to be very good month for this sector, with average returns of 5.35%, 5.74%, and 9.90% respectively, with 9 positive years, again 9 positive years, and 8 positive years in the last 10 years. So probably except September, April, May, June, July, August, October, November, December, and probably January are good months for this sector. So all in all, more good months and only couple of bad months for this sector that I can see from this graph. Let's see the key takeaways. Cheaper months, February, March, and September. So February and March with negative average returns of minus 6.65% and minus 2.63% respectively, and September with negligible returns of 0.27%, but more importantly, 7 times in the last 10 years, the sector has given negative returns in the month of September. Costlier months, April, October, November, and December. So April, clearly the favorite with 10.72% average returns, 9 out of 10 positive years. October, November, two very strong months with 5.35 and 5.74% returns respectively, both again with 9 positive years. And December with average returns of 9.90% with 8 positive years and 2 negative years. So solid 4 months, and apart from those 4 months, there were again 4 5 other months as well, which too have given respectable returns. So all in all, a very strong sector. And finally, the positive to negative month ratio is 1.67 is to 1, which means 1.67 positive months against every negative month in the last 10 years, that is last 120 months. So all in all, a good sector, I would say. And that is all from my side in this video. Thanks for watching it. Please subscribe to the channel, like and comment, and share it with your family and friends. I'll be back soon with another video. Goodbye for now.